What's up, YouTube? Welcome to the Credit Plug channel where we talk about how to build credit, how to establish relationships with banks and financial institutions, and most importantly, how to get you access to high limit credit funding. If that's something you like to listen to, then we definitely welcome you to subscribe. Otherwise, you can support our channel if you just like, share, or even comment down below. It helps our content get out to a wider audience, and we greatly appreciate the support. As a reminder, don't forget to hit that notification bell to get the latest alerts on all the different content and videos that we drop here on the Credit Plug channel. So for today's video, I have a special credit union to cover. Now, I did a poll the other day to see what types of videos you guys like to see. And I know we had originally done a lot of credit unions, but out of all of the choices, big banks, mid-sized banks, credit unions, fintechs, and CDFIs, you know, the overwhelming majority of you prefer to see credit unions. So that's probably what we're going to be covering, getting back into, because I know credit unions offer a ton of value, especially the one I'm about to go over right now. So this particular credit union that I'm going to go over is AgFed, so it's Agricultural Federal Credit Union. Now, this is a smaller credit union in the Washington, D.C. metro area. However, membership is open, you know, to anyone. Basically, if let's say you live, work, or worship in the Washington metro area, then you're automatically eligible. And if you're not, then one of the ways to become eligible is if you become a member of the Friends of the National Zoo. So the National Zoo in DC, you could do all of that through the membership application. So it's pretty straightforward. Anyways, they actually have some great products that you should be aware of. So first starting, they have a line of credit that goes from a minimum of $500 all the way to $30,000, which is pretty decent for a line of credit. Also, too, they have some credit cards. I would say the two unsecured cards, right? They have a platinum and a classic, and then they also have a secure credit card. I did confirm, so with the secure credit card, a minimum of 500 up to 10,000. However, the secure credit card does not unsecure, so that's one of the disadvantages of it. With the other two credit cards, the classic and the platinum, so the classic has a minimum starting limit of 500 and it goes up to 10,000. The platinum goes from 5K all the way up to 30,000, so it has a higher minimum starting limit. And then one thing that's going on right now, there's a 1.99% balance transfer APR for the first 6 months. So you could definitely take advantage of that. It's not quite 0%, but 1.99% is pretty low, pretty negligible if you ask me. And then they pull Equifax for credit decisions. And the hard pull is good for 30 days. So that's another great thing. And you can apply for multiple products within that 30-day period. Now, here's one very, very important thing when it comes to double dipping, right? And this is from me speaking with one of the lenders. So they have two different ways of applying for credit accounts. One is through the online application, the other is over the phone. Now, however you apply initially, right? So if you apply over the phone initially and you want to double dip, in order to avoid getting double pulled, you have to apply through the phone again. So if you apply through the phone the first time and you want to double dip a second time, you have to apply over the phone again, because the reason why you have to do that is because the phone app, applying over the phone and applying online, they don't necessarily see the credit report, right? However their system is designed, that's just how it is. If you apply online the first time and you want to double dip again within that 30 days, you have to apply online again. The way it was described to me, there's two different systems, I guess, so they don't necessarily talk to each other. So just keep that in mind in order to avoid having to get pulled again. Just apply through the same way that you applied the first time. Otherwise, like I said, this is a pretty good credit union. They use what's called risk-based lending. Risk-based lending is basically when the lenders are pricing in the risk based on the borrower's credit profile as well as their income and other characteristics. Now, this particular risk-based lending, like I said, it incorporates other data points besides just credit. It looks at other things. And one of the benefits of risk-based lending is that it does expand access to capital to individuals with lower credit scores, lower incomes. However, those higher risk consumers are just going to be hit with a higher interest rate. So that's how it works. So that's sort of the trade-off, right, with risk-based lending. But risk-based lending is supposed to be more inclusive. Now, here's another thing too about the loan, credit card, line of credit application process, right? So I asked about POI, which is proof of income, and from what I was told, proof of income is not always going to be required. And this is something that I've seen even with working, through other institutions, where in some cases customers will get asked to provide POI, whereas others won't. And what I've noticed was that usually when you're at the higher end of the credit, so if you have a really good credit profile, really low debt to income, then usually they're not going to ask for POI. However, if you're closer to like the boundary of whatever their underwriting criteria is, then they're more likely to ask for proof of income. And that's basically exactly what the lender stated when I asked about POI, because when I asked, she basically said it depends, right? If they feel as though they need more information to really assess whether or not to approve you at a certain limit, then they may just want to see what your income looks like. However, if your credit is already in a position where it's much higher than what their underwriting is, then they may not ask you for POI. So with this particular institution, POI will be subjective, right? Depends on your profile. So that's one thing to keep in mind. I know there's a lot of people who are very reluctant to provide POI with Ag Federal Credit Union. Like I said, it's going to vary. So you could definitely try it out if you feel like you have a really strong credit profile and you don't want to really, or there might be some constraints with you actually providing proof of income. This may be an option. Overall, it seems to be a pretty decent credit union. Also, no hard pull for membership, so that's another great thing as well. And again, they pull Equifax, which is something that we've seen a lot with a lot of smaller credit unions. For whatever reason, they love Equifax, and so that's what they're pulling here. Otherwise, like I said, they have some decent credit cards, a line of credit up to $30,000. So not too bad overall. I would say that they're fairly decent. But anyways, if there's anyone who has any data points on Agricultural Federal Credit Union, definitely let us know in the comment section down below. And until next time, y'all take it easy, and we'll talk to you soon. Peace.